While we let Darren kind of filter in here, I like to try to get these started as quickly as we kind of can here. Want to thank everybody from taking time out of their busy schedules, as always. Really exciting to see kind of the convergence between Web 2 and Web 3. I know before we get into intros here, reading through BankSocial's websites and looking at where credit unions are right now, John, you guys kind of have this kind of analog DeFi aspect. I would love for, a little bit later for you to dive into that. Before we get started, though, I want to kind of do a round robin here and allow for everybody to introduce themselves. Maybe since you guys have brought some esteemed guests with you guys today, John, we let James and Angela give the intros first. So, James, if you could give us a bit of a background of yourself, what brought you into kind of the credit union industry, and maybe an overview of the relationship that you guys have kind of developed with John and BankSocial too, that'd be fantastic.
Good morning, James McBride. I got into the business about 25 years ago. Honestly, I was in college. What got me into the credit union business was I wanted to help people. And so, the credit union industry, hundreds of years ago started with people helping people, trying to find ways to bring community into banking. And so, honestly, what really attracted me to the credit union movement was the member relationship. Members get to be owners in their financial cooperative and help make decisions. And so, I've spent my entire career trying to help people solve problems that other financial institutions ignore. And so that's, I think, the beautiful thing about our business, but also what brought me into it. With the BankSocial connection, I think you mentioned kind of the analog DeFi situation earlier, and I think really what attracts me to BankSocial and what they're doing is the ability to create kind of a digital evolution of what our industry was doing for decades that most people just frankly don't even know about. They don't even know the value of being part of a credit union. And so it takes it from the credit union down the street that you have to walk into and say hello to the teller to get to that relationship to total control from you from anywhere in your pocket. And that's really what's really interesting to me. And frankly, I'm still learning myself, but very interesting evolution of kind of the similar concept in banking that BankSocial is building.
Awesome. Thank you so much, James. And yeah, Darren and I talk about this all the time, all the spaces we've been in and how desensitized we are with kind of all the crazy news we see now with adoption of Web3 technology. But if you're not still learning, you're going to, I think that's a really well put, if you're not still learning in this space, it's really easy to kind of get passed by. So really excited to dive into the weeds with you today, James. And Angela, I'm going to turn it over to you. If you could provide just maybe a brief intro of yourself, what brought you into the credit union industry, your position within the Credit Union of Texas, and what got you interested in Web3 on the path to working with BankSocial.
Yeah, good morning, everybody. So I have been with the Credit Union of Texas for 19 years. I also started when I was in college. My first job in a financial institution was actually as a teller at a bank, and it was a terrible experience. So I moved over to a credit union because I had heard that they were more member friendly. Should have been a better experience for both staff and members, and that's kind of where I have stayed ever since. When I moved over to Credit Union of Texas, I actually started here in our collections team, and that was something I was scared to start in because I've had past dealings with collection agencies and they were not very friendly. But what I learned is that at a credit union, there really is a lot of love for members. We really do care about our members. We want to help them. We want to be there for them in any way we can. And so I've never looked back since then. Um, I went back to school and got my project management degree and MBA. The credit union helped usher me through my education. I've grown up here, and the rest was kind of history with that. But with BankSocial, I've known Becky for a few years. We've been talking off and on. And what really drew us to them.
Did we rug Darren?
Well, I'm still here, so I can't. But Angela, yeah, it sounds like Angela's having a issue with her speaker.
And Angela, if you're if you have headphones in or on Wi-Fi, I always recommend just going right on 5G signal or laptop. I would recommend using phone. So let's maybe give Angela a couple of seconds here.
So,
Go ahead. Go ahead. Sorry.
sorry, BankSocial has developed a really neat concept around digital assets. Are you able to hear me now?
Yep, we can hear you now.
Okay. All right. So I'm sorry, I'm not sure where I cut out.
I think at the beginning of the onset of the relationship with Bank Social, and then I kind of
Okay.
just give a heads up, like if you for Twitter Spaces are always a little bit wonky. like uh, I always recommend no headphones, no laptop, just write straight from your cell phone on 5G signal, just for kind of future reference if when you guys get into these spaces. But you cut out right at the beginning of the relationship with Bank Social and Web3.
Okay, so yeah, so been speaking with them for a few years. They have developed a very ingenious product, right? So everything is going Web3. I don't think anybody can deny that. Members need to be able to have access to bank in the way that they want to bank. So really, the reason we started working with them is so that we can provide those services to our members.
100%. John, if you want to maybe give an intro of yourself, and we're going to definitely dive into the weeds with both Angela and James here. But John, just give us an overview of yourself. What brought you into the Web3 industry, and what led you into the development of Bank Social? That'd be great.
Yeah, so I'll make it really quickly. So I got into, I was very early. So actually the team that I'm working with right now is the same team that over the last 10 years, our development team. I started with them out of college, and they're the development team that actually built and built everything in cart.com and omnichannel commerce. And we were all early into that. And when I first left, I had two stints at that company, and when I first left, I was replaced by a man named Ben Lake. And then when I came back 4 years later, after doing some after starting some companies, I came back to replace Ben Lake. And when I was taking him out for his kind of exit, download back to me what's been going on for the last few years, he told me about Bitcoin, and that was in May of 2010. And our whole team here actually has been kind of in the space since that time. I think I took it the most to heart and understood that this was going to be the future. And then kind of as a developer, I did everything with it. I stayed as up to date as I could through the whole coming of age of Ethereum, programmable smart contracts. And then as we started to get into the next evolution of things, I got I was one of the first, I think, to read and start talking about to my friends who were all in Bitcoin and Ethereum about the Hedera white paper in early 2016. We used to debate how the evolution was happening. And when 2021 came around, 2020 and 2021 came around, and we saw this shift, massive shift to digital, because now everybody's working from home. You have to be digital everywhere you go. COVID, you can't go out. You got to order online. Everything turned digital in months. And through that time, I understood that with the distributed kind of nature of how humanity was moving forward, that there was, and then of course coming up to 2020 with all the retail side getting into distributed ledger, I said, okay, now is the time. We need to find a product. We need to find a market fit for a product and a set of tools. But we're not going to do the whole, nothing against meme coins, but we're not going to do the whole meme coin. We're going to bring real utility. I looked at 2019 as kind of the 1999, 2001 period where we had that was really the first big wave of the internet where a lot of people came in. And so I looked at 2019 through 2021 as the exact same scenario and said, the companies that build the real utility on Web3 technologies and distributed ledgers and make it easy for people to participate in this social capitalistic new ideal of economy where it's trustless and it's direct and but you still need the regulated institutions. You still need to vet. Who's going to vet? You can't put it on the people to vet everything themselves, right? And more specifically, it's really hard for a single institution to do everything under the sun. And that's kind of why when we came back and looked at where could this live in the world, we came back to American Credit Union. So after we created the DAO, after we did our first loans with the DAO and the BSL token, we said, how can we expand this to the next level? And that's when I started trying to start a credit union, but met Becky Reed. And we quickly understood that the way to help the world, the way to help people, was to help credit unions and to bring these technologies into these companies. You heard both James and Angela, both of them said the reason why they got into this was to help people. And so when we talk about analog DeFi versus, this kind of wave of digital DeFi, the Web 1 version of DeFi versus we can skip Web 2 is the great part. And now we're going straight into Web 3 for most of these credit unions. And so when we look at what the matching of ethos between the DeFi space and credit unions, there are so many parallels. And when you start talking to people like Angela and you start talking to people like James, you understand that really all that's missing are the tools to put in people's hands that don't cause risk, that aren't super expensive to implement, and that open up the banks. The difference between a bank and a credit union, if for those who don't know, is that a credit union is member owned. It is member owned. So there is no shareholder technically in a credit union. You are technically the shareholder. And so everything is done for and on behalf of the members. Well, to me, that's exactly what DeFi is wanting to do. It's economic communities that are owned by the community and not by shareholders that tend to do more risky things because they want to maximize profit. There's a fiduciary responsibility to the profit, to the shareholders, to increase those profits. There still isn't a member-owned community, but the beneficiary is the member. And so when we started meeting with credit unions, we really understood, and they started to understand, that the marrying of a product like BankSocial was a way to step forward in a low risk way, because we believe in self-custody, right? The other thing that credit unions believe in is owning your financial freedom. Well, that to me also sounds like what the DeFi movement and the Web3 movement and the self-custody movement is all about. And we're starting to see the cases come down. I'll reference the Gary Gensler case, where now Gary Gensler has come out and said, your keys, your crypto. So meaning the majority of cases you see that are getting enforcement actions are either blatant frauds or they're really literally issuing securities. If everything is happening on chain, it's a lot less likely that it's a security. And then you have the other two cases that have just been decided as well, where secondary sales, the XRP case, secondary sales are not considered securities if they're done in an open, decentralized, on-chain way where everybody can see what's going on. And then you have the recent what Coinbase was working on, where that judge came out and said self-custody is all good. It's really only when you're telling people that there's this magical thing called crypto, but you're just holding it in one big omnibus, one big account. And so it's really exciting right now. We're very excited.
Awesome. Thank you, John. I would love to get, and for those just joining us right now, we have President and CEO at Connects Federal Credit Union, and Angela is the Senior Vice President and COO, or Chief Operations Officer, at the Credit Union of Texas. I would imagine it's pretty exciting. I kind of want to walk through like the empowerment aspects of credit unions from both of your standpoints, and kind of when you look at like how people are interacting now, totally digital, everything else. I mean, there's probably a huge opportunity to get the word out about what you guys actually offer through credit unions that empowers people instead of going the traditional route of banking. So I guess the question for both of you is, can you maybe go a little bit more in depth into the credit union model, its relevance to, either younger generations or entrepreneurs, things like that, and what that represents from like a financial empowerment standpoint to the individual or business? I'll start with Angela.
Yeah. So, like you mentioned, credit unions are all about empowering our member. We are member owned. So, a good way to think about it is we pay our staff, we pay our vendors, and then everything else goes back into the community. And younger generations are very socially aware, as you can see with social media. Everything is out there. They want to be a part of something big. They want to make a big difference. And so credit unions are uniquely positioned to be able to help the younger generations with that. Um, Again, being social and 100% digital, they don't necessarily see the need to come into a physical location to do all of their financing like we used to have to. I think my daughter has Venmo, Cash App, PayPal. She wants to be able to do it as she wants to. She doesn't want to have to wait for traditional banking hours. She wants to be able to say, "Hey, I need to pay my friend for buying me dinner." So really, the younger generations want to be able to have quick, fast access to their funds. They want to be able to do anything they want without having to depend on a bank. And I think BankSocial has really created a process for them to be able to do that easily as we move into the digital asset world.
Awesome. Thank you, Angela. And same question for you, James, as far as, from your stance, the empowerment aspects, what the opportunity is within kind of the credit union model versus the traditional big bank model, and kind of just, I guess going along with the status quo, and, what digitization kind of represents within that model for credit unions to even kind of up the ante for empowering the members within your institutions.
Yeah, I think I really align a lot with what Angela just shared. But what I would say is I think it's important to note that what BankSocial is doing is really evolutionary in the credit union space. So it's not terribly prevalent right now, right? But there's a lot of continuity. I kind of mentioned, and you mentioned as well, the analog nature of today's credit union. And what Angela is saying is that that model really doesn't work anymore. We're finding with the younger generations that we need to be different, but different is just something that's a new iteration of what we've always done. So credit unions, there's a lot of variances to the way that you can join a credit union, but essentially, most credit unions, if you're either aligned with a sponsor group, it could be your employer, or maybe it's in your community, you can go and you can see the credit union somehow digitally, in person, whatever, join the credit union. And then you have a voice. There's an annual meeting where you get to elect directors and you get to be part of the direction of the credit union that way. And so from that standpoint, the employees of the credit union are really stewards, right? The directors are volunteers. They are working to make decisions that are in the best uh, uh, in the best interest of the entire membership, right? And so that's kind of the way the model works. You're an owner, and when you come in, you can elect the services, and you can have a voice as to what those services should be. And that's kind of the way the model was built years and years and years ago. And where the variance is between what you might get at some of the traditional financial institutions, credit unions historically tend, I'll keep using the word community, to be engaged in serving the underserved, those people who may not be able to get the service they're looking for, the personalized attention, or the care from the box financial institution down the street. They might be able to get from their credit union. The truth is, what we're doing with BankSocial is we're trying to revolutionize and evolutionize our technology so that we are more aligned with the markets of today. But again, from an analog perspective in today's world, in migrating digitally, the credit union industry is unique in the financial space in that it really truly cares for its consumer base in a way that invites them in. So, it's kind of like you get to see behind the curtain with the Wizard of Oz, right? So you can actually be part of how the credit union operates, not on a day-to-day basis, but at a high level, and you can have a voice. And most credit unions, most of the credit unions in America are small businesses. And so a lot of times they get to know their consumer by name. They know your story. They know what's going on with you. They want to help you. That's one of the things that I think is really, really, there's a lot of different types of credit unions, a lot of different models from a standpoint of how they operate their business. But to a credit union, I would say I've met very few that don't want to help the employee base and the member base, the volunteer base, and the community as a cornerstone for how they run their organization.
Yeah, it's really interesting. I know my dad has run his own business for, well, he's getting up there now. He's trying to he's trying to retire, but he can't. But for, probably 30 or 40 years, and he's always just used kind of his credit union. I'm curious, John, from your stance, and maybe we kind of go round robin here as well, because I know you mentioned Ripple earlier, and they've taken this obviously from the central banking purview and kind of just like injecting into like global, global remittance streams and all the other stuff that was kind of coming along with that. And we've seen kind of the path that they've had to take, and it seems like it's not even walk before you run, but it is like literally try to crawl 1 inch forward and then go 2 inches back. But there's a lot of relationships developed there. I'm curious, from the relationships that you've been able to develop with all these credit unions, like, where is the intersection now as far as being able to inject in portions of the technology, and where do you kind of see it going over time?
Yep.
Yeah.
Yep. So both Angela and James just described what we know as a DAO. Okay. Let's first start from that. Okay. So credit unions are literally the DAO model. And so we see a future, and these are things that we are actually working on right now, where your self-custody wallet is not only multi-chain, but it's I don't, like Angela said, people are using Venmo, PayPal, Cash App. They all offer different services, but you got to have 25 apps. Really, they're all unregulated banks. It's not great, right? What people are really looking for is a tool, is access to a product. And so by allowing credit unions to do what they do best, serve their communities, typically you don't even have the overlap in credit unions of people. For example, Angela's credit union serves a ton of people in communities, right? And so the ability to have a single place or a single app or a single experience and log into your credit union just like you would with multi-factors, like with Wallet Connect, right? This is how the future, where your credit union went, let's say, yearly votes. Why can't those be done like a snapshot on chain vote? Hint, hint, they will be, right? This is where the future is going. And because credit unions are already analog DeFi, because there's a more of a focus on communities, right? The ability for these banks to coexist, these banking institutions to coexist, is tremendous. And that's really what DeFi is about. It's not about the single fi. It's about what financial tools and systems and ecosystems resonate with you. And that's where I think a lot of the other, sure, will there be the need for trade finance in trillions of dollars per second to happen through Ripple? Maybe, maybe. What really is needed is a tool for the people. That's what's really needed, because every business, every institution has one sole purpose. No matter how far up and down the supply chain they are, they only have one sole purpose: to service a consumer at the end of the line, right? A person, an end user. All businesses. Sure, there are some businesses that are, business to business, but then they're business to business to business, and then somebody's supporting a consumer at the end of the day, a person. And so we need the tools for the people. The people need financial tools that don't behold them to, for example, the $1 billion a day in transaction fees. And these are the things that credit unions work to give back to the community. And so when you look at how DeFi is progressing and what it wants to do, what it's inherently wants to break out and do, and when you look at what credit unions are doing and what they inherently want and have done for, damn near a century and a half at this point, you see this tight alignment of the two ecosystems, unlike any other ecosystem, to embrace the ideals of open self-custody, open banking. So the word open banking has been around for 30 years, right? The reason why it hasn't taken off is because, first, technology. Yes, technology has been a problem. Also, though, the people spouting it are MasterCard, Visa, Chase Bank, and Wells Fargo. How open, how truly open do you think those companies want this future to be? And I have nothing against them. We love and thank them for everywhere we've gotten and everywhere they're going to continue to take us. Now, though, there's a different way. There's a way for people to embrace the idea, credit unions to foster and enable this idea of open banking. And that's where I think when you're talking about what everybody else is focused on, what's really funny about this, and then I'll turn it back to you, is that Manson Lehman. So we've done a lot with Manson Lehman. They're in Dallas here. So we've done a lot with them. And they've gone to us to several credit union events and spent weeks at a time with us. And we've had dinners and we've talked about this. And through the whole thing, what I found out was back in 2015, 2016, when I first got the white paper and I was like excited about what Hedera was going to become, they were already talking to credit unions because they believed the same thing back then. They were already engaging with credit unions. And so when you look at how everything has progressed, we are literally right at the point where the technology's ready, the institutions, the early adopter institutions are ready. They understand it. They're no longer kind of behind the eight ball on, well, what does this really mean? They are I think you can understand by Angela and James talking that they really understand what this future is about. I mean, with Angela, we've had discussions that I can't really talk about what we could do with lending and what we can do with other components of this to not only, reduce costs and give more back to the user, but to make the systems more secure. That's, I think, one of the biggest things with Web3 and kind of the limits that Web2 is reaching. But I think the only place for this DeFi future for the people to live is in the non-for-profit financial cooperative. It needs to be trusted. You need to have trusted, regulated institutions so that, it's not just willy-nilly. And they need to be for the people. And the only place that can happen is American credit unions.
So I had a question about, like, you were mentioning Cash App, Venmo, PayPal earlier, and I've noticed there's been a ton of scams just going on, and those companies are unwilling to work with the customers. So when you have an immutable ledger, how exactly do you aim on, like, resolving issues where there's a chargeback or something to that nature? Would there be an escrow service or something, or some type of insurance policy?
So, the interesting thing about Web3 and really distributed ledgers is right now it's almost impossible to do real-time screening on transactions that are siloed across hundreds and hundreds of thousands of institutions, and every single one is its own little silo. CVS files, CSV files being passed back and forth nightly via ACH to the Fed. There's no way for you to catch fraud. There's no way for you to mitigate it, detect it, shut it down, right? With Web3, with like what we're doing with Chainalysis, for example, so our Secura product that you launched this morning, the future is really about protecting the individual's experience, right? Because the individual right now, you're entrusting the individual with their entire security experience, and you're hoping that your app is doing a good enough job. But you've taken all the passwords and you've centralized them. You've taken all the data and you've centralized it. So I don't even need to be scammed by them attacking me. They just need to go in and steal my data from somewhere. And that's one of the biggest opportunities with Web3, is to put the attack vector out to the individual, which we already know that for, SSL peer-to-peer connectivity has been robust and unbreakable for decades now. Where it starts to fail is when these companies open up hundreds and hundreds and hundreds of APIs to thousands and thousands and thousands of people, and then you get an Experian does what it does every 6 months, because it's not Experian's fault. It's just the way these technologies, the Web2 technologies, just like Web1 hit its scale with access, right? The phone line, the AOL, Prodigy, they couldn't deliver enough information. It had to open into Web2. Well, that same threshold is being hit now with security, APIs, fraud. because it's all centralized risk, right? We need to move to a trustless economy and put the tools, the devices that we have now in our hands, they are exponentially more powerful than we understand and know them to be. And the secure enclaves on these devices have proven to be one of the most robust security mechanisms ever invented. So why not pair this great technologies, right? Reimagine them in a different way. We kind of see it like, every component for the iPod was available when the iPod was made. It just needed to be brought together in a way that created a new experience. And that's exactly what we're talking about here. The ability on Web3 to do almost an unlimited deep dive due diligence, AI, machine learning view in real time, to block transactions, to give warnings to people, to create the wallet experience and the ownership of the data in a way that when you pass it off to customer A or customer B, you with an immutable record know that if that gets out of there, you know exactly where it came from. So think about how easy it'll be in the future for you to prove that, hey, I gave my data to that company 6 months ago, and then that other company got my data, they sold it, they shouldn't have, and now because of the record of the stamp, I should be paid. You could have AI lawyers. I mean, that, we're talking crazy stuff now, but the ability is unmatched to protect the consumer. And I think that's one of the biggest opportunities in the Web3 space in general with self-custody, is the security mechanisms that we can put in place at the individual's level on their data, on their financial access, on their tools.
I'm curious, John, as far as, and I have kind of I guess a couple of like more general questions in a bit here, but what types of integrations exist now between, some of the clients or partners that you guys have through BankSocial within the wallet or the app? What can people kind of do right now? How do you envision that kind of transforming over time? Maybe talk a little bit about the application as well, because I know that it's not really just a wallet. There's a lot of kind of different things coming down the pipeline, but if you could kind of walk us through that, that'd be great.
Yeah, so we call it an open banking platform. And, for example, with Angela's Credit Union out the gate, we've got some really cool stuff that we're working on. Namely, we initially tend to get penetration with one of our two products, either our payments hub, Rivia, which has the stablecoin component, which you'll start to hear a lot more about. We've got a number of credit unions on that. As well as the BankSocial self-custody wallet. And so the way we work that is we've actually got a feature about to launch that allows the credit union to co-brand the app with their own logos, with their own. So you create this trusted, open, yet familiar branded environment that allows the member to come in and feel secure in the relationship. And then if you see what we just did with Secura, we just launched that's starting to get major traction. So that's got a component called decentralized recovery, where the credit unions host a node, and then the wallet interacts with those nodes and distributes your key into 100 pieces. So literally, we're inventing what I'm calling the warm wallet. You don't need. We were laughing last night. Anthony and I were up late last night working on some really cool Secura stuff. And we were laughing because there are some of these devices, like, if you had to carry that around in your pocket, we were thinking about doing a commercial where you're at like a party in Austin or something. And this guy's like, hold on, I need to send some crypto. And he's got to take like a Frisbee out of his pocket. Like, there's no need for that to happen, right? And there's no need for you to really ever have to save your key. We're past that point. I mean, you can, and I do, but I just want to kind of have a set it and forget it. And I don't want to have to rely on two companies, like, some of the other solutions make you rely on a company and their two friends. And how robust is that? We're talking about splitting your key up against, mathematically impossible scenarios of losing the passphrase. When we start talking about this, I had a call with a call with Lehman, where we both said that this is, being able to do something like this with credit unions, with financial, and they can help. These credit unions can help anybody. You don't even have to be a member. That's what's really cool about it. And the way the social economics of all of it works, we participate with the credit unions in fees and rev shares. And so that goes back to the members. members. So we really are, we're not just talking the talk of socializing capitalism, we're building it, and we're building it with credit unions. And all of these products that I talk to you right now are implemented in some form and fashion with some credit unions. Angela and her team have been wonderful and fantastic in exploring, just even outside of what we have now, other fantastic opportunities. I mean, they're even coming up with stuff, and we're like, oh man, wow, yeah, like that would be, I think there's the CEO is also listening in on it, and he's had ideas for stuff that we can't even talk about. That's magnificent and fantastic. And so, even James, we showed him, we're building a core that has a component of, a small core that has a component that can tie back to on-chain events, so that regulators, when they come in, they can see what happened, and it's immutably checked to a ledger. I mean, all these things are in place and working at various credit unions. And I think that's what, the space in general is excited about, is that it's not just hot air of open banking. It's actual products that people are using now that credit unions are implementing and gaining the benefits from with their members.
Totally. And just as a sidebar here, kudos to BankSocial. I know you guys are part of the Decentralized Recovery Alliance alongside Algorand proper, and I can't remember if it's the foundation, the association, Swirls.
No, it's Hedera. It's actually
Hedera proper. Yeah,
Hedera and Swirls. Yep.
We're doing. I guess I'll drop this now. We're doing a space, I think on the 25th, that we haven't announced yet, with John Woods, who's the CTO of Algorand, with Lehman Baird up on the same stage. That'll be awesome. I wanted to ask both Angela and James too. You mentioned, Angela, you bring up an interesting point where it's like, if you look at what, I think we kind of always have to look at how like younger generations are engaging with finance and different things, and they just want it to work. They want it to be quick and easy, and they want to have options. And like, if you mentioned Venmo and PayPal and Zelle and all these things, like, I'm curious from your standpoint over time, like as digital assets become more widely adopted, do you kind of foresee, and this is just kind of an opinion question, do you foresee kind of digital assets being a part of people's everyday lives within wallets, things like that? Like, how do you kind of see that transition occurring over time, since you've, kind of really dove into like the technology aspects?
Yeah, I do think that as we move forward, we're going to start to see this, maybe not in the next 6 months or in the next year, but it is going to start to become more popular, to where these other payment platforms are going to, in my opinion, have to start offering the same capability, and they're going to have to catch up on being able to compete in the industry. But I do think long term, we're going to start to see a shift, right, from our regular paper fiat to a full digital wallet. I mean, right now, everybody is conducting business with Apple Pay or Google Pay or Samsung Pay. It's very similar, but you have the control. So I do think that we are going to start to see more and more of this get popular throughout the years. And probably when my daughter's my age, I could see it being one of the main sources of financial transactions.
Kind of similar question for James, and I guess I'll piggyback off of what Angela just said. It's very apparent, like if you pay attention to kind of what's going on within like the financial industry, like from the member-owned aspects, which you guys very much so deal in, all the way up to kind of these monopolized like institutions that are kind of running the world. They're all kind of digitizing, like, and it doesn't, you can look at like mainstream news and you don't really see it or get the picture of actually what's going on and how much is actually being built behind the scenes. I guess the question I have for James is like, what do you think is going to end up happening to institutions or credit unions or banks or whatever it may be that aren't prepping for digitization now and starting to integrate things that make sense so that they're prepared kind of over time?
Yeah, the interesting thing, I was looking at that this morning, actually. Over the last decade, the credit union industry has shrank by 1,000 institutions. So there's 4,600 roughly federally insured credit unions left in America. And so the institutions that are going away are stuck, and this is happening in community banks too. I just don't have the data on that. But the institutions that are going away are stuck in the way that things were, and they're not moving towards the way that things are. Um, and there's this convergence, right? So like when I first got into this industry, gosh, like I said, 25 years ago, on my orientation, they told me, James, paper checks, they're going away. They're not going to exist in a few years. And, there's still millions and millions of those that get used, on a monthly basis, on a daily basis. And so I think it's migrating. So you see the numbers will deplenish, but what's going to happen to the institution is that as generations change, which happens in every society that's ever existed, things progress. And those organizations that aren't progressing as the generations change are the ones that stop existing. I always look at other industries, and it's a very popular one to say, but I always think about the Blockbuster Netflix shift and what happened there. And it kind of took people by surprise. I think about what's happening right now in like the fintech space as it relates to, we talked about Cash App, Venmo. So I was with a credit union not too long ago that was being hit with Venmo fraud charges upwards of 6-7 figures a year in losses because of how unregulated it is. So you think about what BankSocial is doing, and you think about what they're building. It creates better consumer confidence, but it also creates better confidence for the financial institution to say, you know what, this is secure for the people we serve. So credit unions are not really technology companies, but we have to start moving towards technology adoption at a more rapid rate if we want to serve the generations that are coming into influence in our country. So again, to that end, if they're not moving with the times, it'll be a slow burn, but you'll just see more of them go away.
Darren, go ahead.
I was gonna say something real quick on the coming wave. So MICA, the MICA laws and CFPB laws coming to America and that have already come to Europe are mandating open banking. So it's not a matter of what are these financial institutions going to do to survive. It's either you embrace and put the regs in place, or you're going to have to go away because you're not going to be regulatorily compliant. And so I think because we're starting to see this big shift, like again, I'll just reference Gary Gensler saying your keys, your crypto. I'll reference, for those who haven't seen it, go look up the CFPB open banking rule that's being proposed right now, where it literally says open and decentralized access to your data. That to me doesn't mean everybody opening up Web 2 APIs all over the place galore so that scammers can have a field day with accessing data. No, it means giving you the ownership of your data. You decide where it goes. You decide how it gets used. You own the keys. You own the control. You can take it to another app. That's the interesting part that's happening right now. Is it's not just an idea anymore. It's governments are understanding that we have to move this way, and the financial institutions that support the systems, the countries have to move in this way. And some people say it's CDBC and all this. I mean, we already have a digital dollar. I think it's more about access, and that's why we believe in the credit union movement with DeFi, because it's all about access. It's regulated financial institutions focused on access for the people.
Darren.
James, I wanted to ask you, you mentioned earlier that about 1,000 credit unions have been displaced. Now, I'm wondering why that is. Is it because the banking regulations are getting so high, or do credit agencies have to follow the regulatory guidelines for banks, or do they have a separate guideline for credit agencies?
So FDIC is for banks, NCUA regulates credit unions, but both types of institutions are regulated. If you're asking me my opinion of why most of these credit unions are going away, it's because of the conversation that we're having today. Consumer expectation to get to the table. It's just different, and it's evolving, and frankly, it's evolving quickly. What the consumer is going to expect their financial institution to be able to deliver. Do I have to go see Susie at the credit union 10 miles from my house to apply for a loan? If that's the case, I'm probably going to look somewhere else. And again, I said earlier, most 62% of the credit unions in America, and this is a bank term, so forgive me, but are under $100 million in assets, which essentially means they're probably 25 or less employees on average. And they're trying to serve thousands and thousands of people. And not being a technology company and not being able to have their own development, the larger institutions. So I think about a company, we've talked about the big banks. A lot of the big banks have research and development budgets that are larger than the largest credit union in the world. And that's just the reality of how the industry moves. So I think credit unions are going away because they're not able to keep up with consumer expectation.
Well, also big banks get bailouts. I never heard of a credit union getting a bailout, right?
There may be some truth to that.
I wanted to ask you, we're talking about digitization.
Well, along that same line, I think it's also important to understand that during the financial crisis, you had a bunch of banks fail. You hardly had any credit unions fail. Oh, look at that. How interesting is that?
The truth though is Todd Harper, he said, the chairman of NCUA, our regulator, said not one member of a credit union in this country has ever lost a penny because of a credit union failure. That's over the entire life of the industry.
Think about that, guys. Think about what the profoundness of that statement right there. I don't think anything speaks truth to word more than that statement right there. And that's
like the whole ethos of decentralization completely. Credit unions, right? The smaller ones add up to something bigger, and the centralized big behemoths go down.
I don't know that we want or need them to go down, but we definitely need a place for people where their funds are SAFU, where they are able to peacefully co-bank and open bank and use the tools that they want and have access to these great and up and coming freeing, right? How do you get access to people's hands? Well, you combine DeFi with traditional finance in the form of credit unions, and you have resiliency, unmatched resiliency. It's kind of like why we chose the credit unions to be the helper nodes for secure decentralized recovery. Same exact reason. That the failure rate is such that mathematical improbability is certain.
I'm curious. I know we've kind of. I want to make sure I have enough time. We've got about 10 minutes left. For those that are here with us, we've got seed starter Jesse Hines, who's ex CLO within Gala, as well as GG, one of the projects that is on seed starter right now. But before we get to that, we're talking digitization. You talk about and I think it was you, James, that said, if I want to take a loan out, and the only option is to drive, I have two options. One is to go on my computer and take a loan out, or the other is to drive 15 miles and, sit in an office for 3 hours. I'm probably going to choose the computer option. With the aspects of digitization for you guys, I know you guys are in Texas right now. What does it look like? I'm assuming you have to be living within the state of Texas to join a credit union. John, I know you guys have a lot of credit unions in Texas right now. Maybe talk a little bit about expansion, the access points, the ease of access, I guess. I'll start with, actually, let me ask Angela first, because I know.
Yeah, I was going to say it's probably, yeah. They're not only in Texas though; they are actually a nationwide organization as well. So yeah, I would hand that off to Angela.
Awesome.
All right. So, yeah, every credit union has a different charter, and we are a state chartered credit union. So, if you live, work, and worship in a specific area, you're able to join. However, us as well as several other credit unions have associations that you can join. So, ours, for instance, is if you make a donation to the DFW Humane Society, you can become a member. It doesn't matter where you live if you fall into that field of membership or not. So it really does make it easy to join.
Awesome. And James, maybe if you could touch on it just too. I'm just curious. Because I think you guys are spot on when you guys talk about the ease of accessibility and how everything's going digital. So just curious from your guys' thought process and what you guys offer.
Yeah. So, I'm actually in Virginia, And so our credit union right now is specifically a community credit union that serves the greater Richmond area. And we're also looking at options like what Angela just described to make access available to a more broader audience. But from a standpoint of how do credit unions get their charter and all those things, credit unions, when at their core, were designed to serve, again, what I said before, people who are being ignored by others. Sometimes it is employees of a company. If there's people in the audience, your company may have a credit union that you could join. So it's one of those things that it's just one of those things that credit unions have done over the years is try to find ways to give access to more people so that we can get the word out that there is a place where you're not a number, where you are valued by the person that's on the phone or on your website or wherever you're accessing them, that cares about you, that wants to help you, and has your financial interest at heart. So for us right now, it's at the greater Richmond area, but we're looking to expand that. There's credit unions all over the country. And one of the cool things that we haven't even talked about it's analog, but I think it fits is there's this network where credit unions serve other credit union members that can walk in. So anywhere in the country. So if you join, I don't know that Credit Union Texas is part of that network specifically, but if you join,
they are. Tell them what it's called. Tell them what it's called. Shared branching, right?
Shared branch network. So you join that credit union, but maybe you live in Nevada or maybe you live in Washington. You can walk into a ton of credit unions close to you, and they can serve you just as if you were in Texas. So it's open a beautiful banking thing.
This is the evolution of that ethos. They're already doing it. They are already analog DeFi, guys. This is the thing to understand. And I believe, Angela, you guys are a part of I saw you're part of the which network is it? I was actually up in Frisco last night and I saw one of your ATMs at a thing.
So Allpoint, I believe, has 60,000 ATMs, and we are part of another network as well. That's, I believe, 20 or 30,000 ATMs nationwide.
Yeah, and so this whole idea of shared branching is literally the early manifestations of open banking powered by decentralized finance and Web3. Go ahead, James. I just wanted to. You were hitting.
I was just going to note, you think about like what Angela was talking about, the ATM access points. So a credit union of our size, we may own 2 or 3 ATMs, right? But because we're part of those networks that she's describing, suddenly our members have access to more ATMs than customers of Bank of America, and that's the truth. It's just we don't share our story well enough.
Well, we certainly appreciate you guys sharing your story with us today. And for those of us that have been in this space, even trying to start a company not directly dealing with a token, or if you're launching an NFT or whatever you're doing, you're trying to build a business. I'm sure any builders down there that, even that are dealing with crypto assets or digital assets, like we don't natively. So like even for Genfinity, I think it took us almost a year to get a bank account just because we were talking about building, in the digital asset space and doing some media stuff and everything else. So I would like to kind of go round robin here because we've got 5 minutes left. And if each of you, and we certainly appreciate your time again, can maybe give us a closing thought or what's coming in the near future for either your credit union or the integration within BankSocial. I'll start with John.
Yep. So first I'll say both of these credit unions, for that exact reason that you just mentioned, that's why they're here. They're here to bank people who need banking tools and banking access. And so if you're a business, I know Angela and her team at CU of Texas. I don't know, James, do you guys do business as well?
We will shortly, but not today.
So specifically for businesses, I know Angela and her team at CU of Texas, which is why we're excited to do all these credit union partnerships. Angela's team, they do business banking, and so they are willing, and they are. We've been talking with large Bitcoin miners who can't get banked. Public companies, guys, public companies with stated financial or audited financials, and so their team. this is why we brought these guys here, is because they are embracing this future, and they are not just, it's not just hot air. They're actually doing it, and they're making a massive difference in people's lives who are bringing this stuff forward. And so I just wanted to first say that. Outside of that, I think that what everybody needs to understand is that the ownership of your financial outcomes is paramount in this next wave of the evolution of the internet. And that's what this ownership economy is bringing to the table. And that's what the credit unions are able to plug you into, your credit unions. We've got people asking for it by name at their credit unions. And credit unions like CU of Texas and Connects are leading that charge, and they're doing it with the tools that we're building. They're looking outside of, I mean, we've got tons of tools, but that's not to say we're the only ones. Certainly, though, this is the place, this is the utility that opens up the entire rest of ownership economy. It has to start at the regulated financial level, and then the entirety of the rest of it, the ownership economy, comes to light. Just imagine being somewhere, seeing a QR code on some billboard somewhere, and you scan it, and now it drops a receipt, coupon into your wallet, and then you use it like it's an NFT. You use it. That's what's about to happen. It can't happen though unless the financial ecosystems are working well with the ownership economy. And that's what we're excited about, specifically these two credit unions right here. And again, if you guys do need a business account and you are having a hard time, Angela, like she said, they can get generally people from the entire United States through their associational membership. And so they're here and they're ready and willing to help.
Awesome. I should probably preface. So, John, where can people reach out to? Give Angela and give James a follow, obviously. Anybody that's listening down here, if you guys are interested in reaching out or want to learn more about what their credit unions offer, and reach out to John as well. I know, John, you're pretty receptive in the DMs. And I should say, anybody that has questions down here, I'm sure the BankSocial team will get to them after this as well. But any closing statements from you, Angela? And really appreciate your time today.
Yeah, of course. No, I do think that, both credit unions and the DeFi movement, we share a lot of the same values. As we've talked about here, the accessibility, reduced dependency on the big banks, and the ability to put the control back into the hands of our members. So we're really excited to embrace this and move forward with BankSocial.
Awesome. And James?
Yeah, I think, I've been at Connects now. This is 1 month today. I think the story I would tell people is how this industry works. So I was here for 2 days, and I have CEOs at other credit unions in my city reaching out to me to ask how they can help me. And that's the nature of the business that we have. How can we help each other? We were talking about socialization. That is what we have done since the beginning of the movement. So, credit unions are the way to go to move towards this DeFi. I agree with John 100%. It's going to take a lot of adoption, right? And you're going to see it happening over time. But I think at the end of the day, both what John's doing with BankSocial and what credit unions have done since the dawn of their existence is serve people. And so that's what we do, and we would love to serve this community as well.
Awesome. Well, we certainly.
I'll just add real quick one more thing. If you want to understand how this all works, Becky, my partner, wrote a great book called Credit Unions and DeFi. It's on Amazon. It's super low cost. We wanted to get it in people's hands. It's an Audible book. It's a physical book. You can read it in an hour. Listen to that, because it completely describes everything that Angela, James, and I have been looking at, discussing, implementing, and the future of what that can look like even too. So if you want to understand what we're doing and how it's going to work, go read that book.
Awesome. Well, we certainly appreciate your time today, John. This was fantastic. I would love to bring you guys on again. And it's really awesome to have kind of some dialogue and excitement kind of going back and forth as well, especially from the two individuals that were, gracious enough to take some time out of their day. Again, Check out BankSocial. BankSocial working directly with multiple credit unions today. They brought on James McBride, who's the president and CEO of Connects Federal Union out of Virginia, and Angela Faust, who is the senior vice president and chief operations officer with the Credit Union of Texas. I have links pinned up above. We will do this again next time, guys. I'm going to hop you guys down to listeners. We're going to move on to the next segment.